Hello, everyone. Welcome to another episode of Stable School Podcast, live from Cannes. I'm your host, Raza, head of growth at Scroll, and I'm here with Piotr from Stablewatch.
Yes, thank you for having me here. Super excited and amazing event last few days. So I'm Piotr, I'm co-founder and CEO at Stablewatch, and we're doing all things around stablecoins from media side to analytics.
Yeah, I'm really excited to talk to you today. Before we get into it, tell me a little bit about yourself, like your background. How long have you been in space?
Yeah, so I used to be a sportsman actually. Yeah, but I get bad injury, and due to that, I had to stop doing sports for half a year. And colleagues showed me BitMEX, so I started trading Bitcoin on leverage with no KYC. That was pretty nice. And yeah, just fell into rabbit holes. I was doing custody services for quite some time for both TradFi at BNY Mellon, and then Finoa in Germany, first regulated custodian for digital assets there. And then I went into more investment role, also in Germany. Later on was leading some ecosystem for a substrate layer one and launch my own small prop fund with friends, which we exited in December. So we ended up with a bigger stablecoin stack, and I started looking for ways to utilize those stablecoins to really get risk-adjusted yield on top of them. And I realized two main things. So first, there's no central place for my intel. So I need to go into really different places and especially scroll Twitter a lot to get all of the info I want daily. So there's definitely something to be built here. And the other one is there's nothing about risk when it comes to utilizing my stable coins. So there are some ecosystems or some projects, rather only those bigger ones, so like Ethena or Sky. Those guys got the risk dashboards, but when it comes to some other options, it's most of the times lacking. So I thought that this needs to be built, and there's also like no repository to get me informed on all of the options actually to utilize those stablecoins. So like zero data around it. So yeah, we started building Stablewatch first with a focus on yield-bearing stablecoins, because yeah, that was just real lacking. And later on, we're gonna switch also like to the rest of the market, so like payments and etc. So yeah.
Yeah, you already explained it a little bit, but can you double click on, why are you watching at yield-bearing stablecoins? Why did you choose to start there?
Yeah, I mean, like yield is fun, right? So everybody wants to grow their portfolio. And as I said, like literally zero analytics when it comes to yield-bearing stablecoins. Also, the very big problem was some dashboards have few of them integrated, but they use the same metrics as they use for payment stablecoins. So when you look, for example, for transaction volume, so for Tether or for Circle, that makes sense, right? Because they used to pay you or whoever else. But when it comes to yield-bearing stablecoins, this is totally not informative metric, because those coins are rather held for a longer time in your wallet. So just no possibility for users, and for me that was my very big need, to find place or to build a tool so I can get informed better on what are all of those coins. And also there was no place to see lists of all of them. So I remember I made a tweet when I started looking into this space that I found like 30 coins or whatever in this category. And a lot of projects reach out in DMs, in comments, and later on I made a list of like 110 or something of those, and the reach was like incredible, like 500K in a few days, I think. So I knew that there's really big demand coming from the market, from users to see and understand this category better, and that I just need to come up with some new metrics and actually think how we should analyze those. So that's really it.
So you came out with a new metric. So you spoke about metric. Stablewatch has a metric called yield paid out.
Yes.
Can you zoom into that?
So yield paid out, I think like the name itself is already explain a little bit what the metric is. So we are calculating real yield, so no additional rewards, which all of those coins are paying to the users. So at the moment, you can, or before we launched that, we could do a look at TVL, which is definitely informative metric. So if this coin is big or small, and APY. Unfortunately, APY, I would say, is a little bit manipulated in a lot of dashboards, or everybody tried to show the best possible number there, right? So we actually seen that this can be not informative and misguide people if you look only into APY. So we were thinking what other metric actually could be crucial for a user to understand, okay, this project seems legit because of that. If some project got a lot of TVL, people are like more tend to put more money there, right? It's like a flywheel. And the same we believe with YPO. So if you see like great APY number, but you see that YPO this week, like last 30 days, it's small, you know that maybe it's only an upstick and maybe they're actually indexing something wrong and providing you not really accurate data. And if you're gonna look into YPO on like long horizon, you can understand better that what kind of money is being paid out from this protocol. So is this yield sustainable? If there are any drops, and if there's no yield paid out, you can start thinking, okay, what happened even if the APY haven't moved, because there's a lot of situations like this. So we believe this is really the most important metric for yield-bearing stablecoins. And yeah, at the moment we're at about almost 700 million paid out to users. So it's already a lot, and hopefully gonna cross 1 billion this year. So also very excited to be looking at all of the different things around it, as yeah, there's also a lot to uncover, and YPO is only the first step we've done into exploring and showing users what's behind those yield-bearing stablecoins.
And so, because a lot of yield-bearing stablecoins, when they communicate the APY, often that there's a split behind the APY. Some of them actually denominate some part of that APY in a potential upside that you have when they have a token or something like that. So how do you denominate yield paid out?
Yeah, so it's like purely coins or value which ended up in your wallet. So I'm holding coin A, let's say I'm holding SUSDS on day 1, and on day 10, what is my balance of SUSDS? Because this token is accruing value. It behaves like a vault, and at day 1, let's say it's $1, 1 cent, and after whatever time it's $1 2 cents, right? So we just calculate what's the increase in this value, right? And here actually there are different flavors to it, because some tokens actually grow in value, but some others are paying you additional tokens. So you hold X amount of tokens, but after some time you hold X plus 1 token. So actually it's really case by case, and we see few categories of how we calculate yield paid out. But in the end, like bottom line is it's only real yield, so no additional rewards, what you said, right? That there is no like governance tokens included, or any airdrops you could get from partners of those projects, etc. It's only like real value you accrued to this specific coin, or how much more of those coins you get into your wallet.
So what's next for like yield? So, and I have 2 directions with this question. Yeah. One, where is the yield coming from? And then also, you just mentioned, for instance, yield and governance tokens. Sometimes, a project does really well. They're able to like execute on growth flywheels or integration. So they're used for different things like payments. And that just brings the token that they distribute, the governance tokens, in more demand. So on the one hand, are you going to look at like where the yield comes from? And then the second part of the question, technically speaking, when you do get like an airdrop or governance tokens, that results to some part of the yield as well. Will that be like part of the future dashboard as well.
Yeah. So yeah, let me start with the additional rewards. We thought that this is not really informative, but after some users' feedback, we actually see that there probably should be such metrics should be included in the dashboards. We also sell on the API with different data sets, but historical APY is very important part of this. Euler is our first client we announced some time ago. And we actually see that, there is demand for reward data as well. So probably we'll need to integrate that long term just to satisfy the users. However, this definitely not gonna be included in this metric we're providing at our website at the moment. So that's not gonna be YPO. It can be adjusted YPO. We're already thinking about this because just beside additional rewards or maybe airdrops from governance tokens, etc., which for investors can be very informative, there are also some other cases. So there are big projects which are paying also yield to exchanges. So if you're holding USD from Ethena on Bybit or somewhere else, you actually always are eligible for this yield. So now we think how we should be showing that, because in the end we more or less can calculate that, so we can see what is happening on the exchanges, but most of the time we'll need to do the API call and then why we should trust this data. So this is actually a very hard thing to grasp, and it's totally not trivial, and we already spent quite some time thinking how to do it. Very long term, when such situations are involved, we probably need to be working with some providers of proof of reserves, protocols to be sure that the data we're getting, for example, from exchanges, if there's yield distributed there and would like to calculate it, so we'll need to get some help on that. So actually getting the rewards is pretty complicated thing. And the first question was someone about the risk. So the yield is coming from
a breakdown. So almost spoke with Dialectic today, and they've got a few partnerships on the line that are coming up, but they're a strategist.
Yeah.
And so they run strategies to basically return yields, and they're being very transparent about it. And I think that that could be very interesting information for people to make decisions, essentially, where you park your money, because that has a direct impact on the risk you're exposed to.
Yeah. So that's a very interesting question. And funds like Dialectic, which are focused just on yield strategies, especially on stablecoins, are already prepared to do all of those risk assessments. They get tooling built on their own, etc. But for retail users, there is really nothing almost, besides some reports, but not live data to assess what is going on with your investments. So this is actually our next big release. So we started working on risk assessment framework already with some bigger groups. So we are collaborating with some other researchers here on this mission as well. And hopefully within a few weeks, we'll have V1 rolled out. And sorry, as a retail user, you just can come to our dashboard and understand all of those risks. So how we want to grab that is not to do the final assessment. There are some players or people who are telling, okay, this is AAA token, this is triple B or whatever else, great. We rather at very beginning want to highlight all of the areas which can come with some risk. So users actually will need to, on their own, still think if they would like to have this exposure or not, and not only take our word like AAA, okay, I'm already putting my money there. So you'll be able to see few parameters okay, what are the oracles involved? Is there bridging involved? What is the collateral? What is LTV? What are the cross holdings? Because sometimes you buy one token and you think, okay, I more or less know what are the risks associated with that. let's say it's Ethena, and there was some time they were holding non maker owned supply of SUSDS, like half of it, I think, or so. So actually you get exposure to risk coming from both of those coins, right? And those things are not visualized anywhere. So we are working on this. You will be able also to look at the wallet distribution. So is this yield is going to safe or like some other multi-sig or individual wallets, maybe to exchange, etc. So there's really a lot of stuff to build around here. We only starting, but I think that still, due to lack of such tooling, it's gonna be the most informative place for you as a user, for an investor to get informed on those risks. And I think that probably the most important one is the collateral composition, to understand purely what is happening here, because this is probably the biggest risk factor in most of the cases. Also, what we try to do, and which is very hard to visualize anyhow, and to make it automated, is to look into legal structure of those coins. So we get a legal researcher, and also my co-founder Jacek. He was leading legal at Maker Ecosystem and WorldCoin for quite some time. So we try to look into how the companies are structured, and if there is a default, if you as a user could do any claims, if any law is actually protecting you, and also what kind of regulators are mostly looking at this coin. So because for US residents, probably yield-bearing exposure is going to be pretty hard because of Genius Act, but let's see how that's going to evolve. So also very important for us is to keep track on all of the regulatory stuff and get users informed on that. So pretty recently, I think like a week ago or so, we launched first edition of like weekly legal blog posts, so like 5-minute read when you can get to know everything about what is going on. So last edition was how Genius Act is really stopping passing yield from stablecoins to users in US.
So if you look at and we can double click on that in a bit. I think that's a very interesting, I think, development, and how that breeds, let's say, the need for information. What's your main target audience for Stablewatch?
Yeah, so like long term, I believe all of the equities and everything from TradFi gonna just join on chain, as that's just better infrastructure. There's still a lot of things to build, especially privacy, if we want to onboard like Wall Street into DeFi or just on chain. So actual long-term decision maker come from traditional finance institution is like ideal user, but we're not in a point of time when there's really a lot of them in the space. So at the moment, we also try to provide all of those things we already building to meet the demand coming from TradFi, just to provide it for free to retail users. So this is it. And then some other surface is working with treasuries of DeFi projects or crypto projects and funds to help them operate the risk exposure. Some other type of connection we have is building dedicated dashboards for ecosystems. So we just partner up with Plasma pretty recently. We're super happy about it as a strategic partner, and also now gonna be trying to cover everything what is going on with USDT Zero within their ecosystem. So that's also a very interesting thing for us.
So if you look at all the stable coins, which one from the yield bearing side have been proven to be most resilient?
Yeah, I mean, it's hard to say really, because I would say it's a new category. It's really popped out as category this year because we've seen SDAI like quite some time ago as a first example, never gets big of a traction in comparison to where market is at the moment. And later on, Ethena really opened up the interest from everybody to do that first, that big delta neutral strategy coin. Quickly after that, also there was rebranding coming from Sky Ecosystem for SUSDS, which is now second biggest and also doing very well. And still, it's like Ethena launch in mid of 23, if I'm correct. So it's not really very battle tested environment, I would say. But like my personal preference, not really Stablewatch one, would be probably Ethena and Sky to be the dominant and the ones I got most of my personal portfolio in, as due to the time they're in the market, their legal structures, like insurance funds and already available risk dashboards. I'm like not hesitant to put money there. And when it comes to like influx of all of the new projects, it started like January this year, and each month you see more and more coming. We see once again few projects working on algo stables. That's going to be very interesting, I assume. And there are really so much exotic mechanisms involved in those coins. So USDAI is doing a loan against GPUs, for example, and they do a synthetic stablecoin against that, right? Super interesting. But then you wonder, okay, am I able to redeem my money later on? So they tried to make a really interesting process to do that, but it's still a new project which can yield. They're not live on main, but I think probably going to be like 10% of APY, probably above. So really juicy yield, but question for users. Okay, if they just launch, am I okay to put my money there, and what's going to be the size? So I say we still don't have enough information to take decisions which with big size if we're not a fund which is specialized already. And this is also why we built Stablewatch.
Yeah, so maybe on the flip side of it, but you already mentioned it a little bit, like what are common red flags that you've seen? I mean, you've mentioned, for instance, legal structure. But what would be your top 3 like red flags?
Yeah, I think we've seen recently a few coins which are allocated, like YBS wrappers, we call them, so which are allocated just into all of the other coins. So don't have their like own strategy, but have some of Ethena, some of SUSDS, and some other coins out there in their treasury. And we've seen that sometimes this structure can be just not liquid, because we've seen some coins which possess almost 100% of some other yield-bearing stablecoin. And then the question is, will they be able to withdraw everything without panic, without really a bank run and something happening? And if all of those coins which are underlying, if their structures are good as well. So if we get YBS wrapper with really broad exposure to many coins, it's a lot of research to understand if you're on the risky side or not. So I would say it's not maybe a red flag, but definitely when it comes to YBS wrappers, you'll need to be very cautious, because there can be a lot of different things which you can't see at the first glance, because they're very often not updated in the docs. And this is other thing, like a lot of docs of those projects are not updated and looks really like extended marketing material. So I don't like that personally, because I believe if those are somehow financial products, they should be structured in very proper way and very informative. So if the project itself is not providing me already all of the data I would like to see, that's a red flag for me. Yeah, and what else? Lastly, I think that the still collateral. So everybody got different risk appetite, but there are some coins which collateral is very, very risky and just not for me, I would say. So like the one from Trump, for example, I'm not a big fan of a structure.
The World Live DeFi one?
Yeah. Of a treasury there.
It's got a significant market cap. I saw it. It rose pretty quick.
Yeah.
So that's distribution.
Yes. Yeah. So marketing is still super important in crypto, I assume.
Yeah. You spoke about Trump. I think that one thing we're seeing is that there are new players in the space. But there are also people who see this as a mechanism where they can attract capital or bridge, let's say, the on-chain and off-chain world. For them, it's like to pull in to throw a fancy word, RWA.
Yeah.
But with that comes a risk that basically anything that happens in the macro environment You see war happening, it basically impacts, crypto one-to-one. And even more so when your yield-bearing stablecoin is tied to, let's say, RWA or like a strategy that's off-chain. How do you reflect for that, or do you even reflect for that?
Yeah, that's a super interesting question. And as you said that you refer to RWA exposure here, actually what is good to mention probably those yield-bearing stable coins. We use that term because just everybody in the market is using that, but really most of those projects are not stable coins because they're structured products, right? But a lot of them during the regulatory arbitrage to call themselves like this. Nobody is really pointing finger at this to, not make any troubles probably, but hopefully also can come up with a better categorization as an industry for that, because it's very, very misleading. And as you said, due to that, they're not stable. Actually, something can happen, and macro is like very big factor. So maybe we're gonna get the rates cut in US. So then all of the TBL wrappers and a lot of projects are relying really on some of their exposure into just buying the US debt. So that yield source gonna be cut in half, for example, right? From like 4.5 to whatever to 2%. Not interesting for anybody anymore probably. So I think that what Fed is doing is probably like the biggest factor when it comes to how yield-bearing stablecoin market gonna evolve as well, and we then gonna see much more also risky strategies to beat the risk rate, which gonna be much lower. And then when it comes to like exposure to real world assets, once again, it's really hard to track that in most of the examples. We were thinking how we could grasp that at Stablewatch, but once again, the same example as with centralized exchanges from the beginning of our conversation, is that probably there need to be like some ZK TLS system, whatever, like ZK proof, which will help connect those two words, so off-chain and give us information on-chain that, okay, all of those reserves are there, everything is okay, and maybe not revealing everything, because TradFi institutions are rather more on this privacy side. They don't want to share their strategies with you, etc. So this is actually a pretty big problem, not accommodated yet, but hopefully will be sometime soon. There are already some ventures which are working on that. So I really get fingers crossed for their success.
So are you with the rise of stablecoins, and it's all things stablecoins, not just yield bearing, you see also FX stablecoins like that are denominated in, let's say, not USD.
Yeah.
Any plans to expand towards that side?
Yeah, I think this is definitely very interesting. So I can share that we already working on some new charts, which gonna appear in some stable school articles on the CPI of a dollar, right? So how your purchasing power of a dollar is decreasing over time. How you could defend it if you put your money into T-bill, and maybe if you're gonna put your money into yield-bearing stablecoins. But not all the world is using dollar. Most of the world would like to have some exposure to it, but there's a lot of other currencies, right? So we also want to include in this chart, this is like first place where we're gonna be interacting with non-USD stable coins, or just currencies, not even stable coins, and to provide some data about them to show how they're declining over dollar, and some yield-bearing stable coins, etc. I also think that while we live in more and more fragmented world, because of the US politics mostly, where US is not anymore a very good Uncle Sam protecting all of the world. They just don't have enough power to do so. They can't be involved in every front everywhere. So trade gonna be more fragmented. So why some of the economies or some of the countries which are not anymore under this US Uncle Sam umbrella be still willing to use payment railways coming from US and settle all of the trade in USD. So like my assumption is that we're gonna see rise of local currencies, and local could be euro as well. This is probably the most interesting one for us. And like I'm living in most of our team is living in Europe, so very interesting topic for our team as well. We already see USD declining against euro, right? So those are things very interesting for us, and we believe that we're gonna see more currencies actually gaining strength because of this fragmented trade worldwide. And what is the like now some network, some corridor to connect all of that? I believe it's not SEPA, it's not SWIFT, those are stable coins. That's the only way to go forward with how the world can work the same as used to like a year ago or so. So definitely we're gonna be doing that. And as I said earlier, that later on we want to come into direction of covering also payment stablecoins. And when it comes to local currencies, we're rather gonna be first looking into payments and how they behave there. Because when it comes to yield, like probably you want to put your money into USD most likely, and only a few others, because still US is the hegemon in the world, and they can print as much money as they can to buy the debt. So risk-free rate is still referred to T-bills and bonds in US, right? So that's why when it comes to yield, rather we're gonna be for a longer time focused on the USD coins, and when it comes to payments, definitely we're gonna be looking a lot into other currencies.
Do you think at some point yield-bearing stablecoins will outpace, like in numbers, maybe also like just in market cap and usage versus payment stablecoins? Like that's the future, or?
Yeah, I don't think so really, but they definitely gonna grow. So at the moment, I don't remember, at probably like more than 5%, I think at the moment. And but I would need to check, but still they're gonna be growing. I think they're gonna be pretty big demand for them. But at the moment, what are the major groups to use stable coins? So I believe it's not really stable coins are not used at the moment for payments as much as we think. They mostly came here and found PMF as being par to trade. So earlier we got everything denominated in Bitcoin. So you as a crypto trader, somebody who got its wealth on chain, have to trade and then withdraw to Bitcoin, which is volatile. And that's why we came up with Tether in 14 or like I think 17 started really popping out, right? So now all of the pairs are with stable coins, and this is like the biggest demand, I believe. I want to buy something and I on-ramp to crypto into whatever coin and I buy Bitcoin or whatever else. This is the main group, and as we see more and more interest in digital assets, in Bitcoin, Ethereum, we see ETFs, etc., this demand gonna be growing, and that means we'll need probably also like more stable coins just to trade against them, I believe, in a lot of examples. And only after that we got like emerging economies, I believe, where people actually want to fly out from their currency, which is plumbing, and got exposure to dollar. That's why people are okay with paying like $6 gas fee on Tron, because liquidity there to some local currencies is pretty deep. So they not gonna lose that much of a money when they gonna swap there. And this definitely gonna be growing. And what is the biggest need actually for those regions where stablecoins can be useful? I believe that in the first place, just exposure to dollar. So first, they probably gonna just want to have whatever coin which is tied to dollar, and that's it. And only later think of yield. It's not a trade-off, but probably as we see all of those stablecoin specific chains like Plasma, they try to offer such services in emerging regions, right? And it's always gonna be for such issuers or infrastructure players be worthy to have the yield stay with them. So I believe that them, banks, or whoever else in money markets at the moment, all of the players will rather like to get the yield on their side. I hope so, that we're gonna get to the point where the the whole market, it's so open when it comes to its architecture, that all of the payments are happening on chain and not in like closed ecosystems like it's happening now in the banks, that the competition gonna be so big that players will need to give out yield to users. But we're quite far still from this scenario. So in the next years, I doubt there can be any flippening of yield-bearing stablecoins against payment ones, but I'm super bullish on both categories to grow. So still, the ratio gonna change, and I think drastically. But no flippening.
So Stablewatch started out, basically giving an overview of the yield-bearing ecosystem.
Yeah.
And then I like the metric a lot, like yield paid out. You mentioned a few things, but maybe like to sum it up for users, like definitely listening, what can they expect like in the next few iterations?
Yeah, so at the moment you can see all of the info summarized on our website, but very soon you will be able to click and see detailed coin pages. So you go and click SUSDS, for example, and get much more metric, just focus on this one coin. So there's wallet distribution, etc. This is one big thing we're working on. The other is this risk assessment. So for me, this is the most exciting one. We still a few weeks away from like V1, and then there is definitely a lot of work to make it much better. And this is a topic we're gonna be focused on the whole year probably. So this is something else. Also covering the whole market. So at the moment we're covering like around 50 coins, I think, because actually it's not that easy to integrate all of them. So we're doing that one by one. We already know that there is like 130 or whatever at the moment in the market. So we're gonna get there in the next months. And that means also integrating new chains like Solana, for example. So this is it. And on the other side, coming into payments. So we're working already on USDT Zero dashboard. And later on, we would love to cover everything what is happening in the Plasma ecosystem, for example. And we're looking for other things we're so excited about to put them faster on a roadmap. But end of year, hopefully, we'll be also covering all of the things about payment stablecoins, as there's also a lot of to reveal here.
A really last question. Well, in your opinion, like what is like going to be the biggest thing that's going to happen this year if it hasn't already happened?
Yeah, I think it's happened already. So Circle IPO probably it's somehow the top for the stablecoin market. I'm not saying we're going down now, but maybe more of a stagnation, or like the growth gonna be not that wide, but let's see. I'm probably wrong, but at the moment I see that people were so excited about stablecoins, and slowly they're looking already for a new meta, because we're talking about stablecoins from January, right? Attention span in crypto is not that long. It needs to change, and we got institutions coming, but those institutions are not ready to already full port into stablecoins, into crypto. So it's great. JP Morgan is doing a stablecoin, etc. But all of those going to be sandboxes and developments which gonna take quite some time. So long term, super bullish on stablecoins, the most PMF product we could ever came up with, I believe. But probably Circle IPO, I believe it's super overpriced. They're not in payment business, they're in fund business, and yeah. So you just can see that people want this stablecoin exposure. They couldn't get it, so they bought the shares, and sometimes probably they're gonna be looking into different things. So yeah, that was probably the most exciting thing in the around this time we're talking.
Well, I think that with the rise of all the tooling and infrastructure, I spoke to a bunch today. I definitely think that that's a huge sign of this side of crypto maturing, and I'm definitely excited for more insight, more transparency. I'm not a huge fan of regulation, but to a certain extent, we do need it. Like definitely, like at least, everything being transparent. One of the key takeaways for me is like the legal structure. I think that's a very insightful one. I think that would love to like know who I'm doing business with, so to say. But Piotr, thanks so much for joining me.
Yeah, thank
and
you.
yeah, we'll have you soon again.
Awesome. Thank you very much.